Hello, everybody. This is Joshua Hayes with BigWaveTrading.com coming to you with the stock market wrap up for this weekend from the March 27th stock market session. Anyway, we all know that on Friday the market indexes were down. Let me go all the way out for these index charts. And as you can see, there was a little bit of a baby tail on the bottom, which means there was a little slight amount of intraday support, but not a whole lot. Still, the good news about yesterday's 2.56% sell-off in the New York Stock Exchange comes on a couple of fronts. Number one, the index still held above the 50-day moving average, so it still didn't break all the way down, didn't have a horrible down 8% day, which is good because for the week it was up 5%. However, before, let me get rid of yesterday, it was up 8%. Still, ended the week on a very, very good note. Over 5 days, up 5.47%. So Friday's down day is a disappointment in that I thought stocks were ready to just go zooming along. But really, look at what we just had. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 up days out of 13 days. So a down day was going to happen. The good news is, though, is that stocks held up. So overall, not real bad. Let's look at the Dow Jones Industrial Average to take a look at the other big caps. You can see here whenever it actually pops up on my telechart system. There it is. You can see a little bit of a tail right there. And actually, if you notice, the open yesterday was 7752. The close was 7776. So the Dow Jones Industrial Average actually held itself actually was like an inside day basically from yesterday's price pattern. However, it did get down to 77.35, so it isn't a true inside day. However, if the low of the day would have been 77.52, it would have been an inside day, which would have basically been meaningless. Volume was lower. For 5 days, the Dow Jones Industrial Average is up 6.84% instead of 8.88%. Still, bottom line is, for the third week in a row, indexes were higher on bigger volume. Now let's just look at the S&P 500 because we're just looking at the indexes. I'm going to have 3 videos for my subscribers. Video 2 will be on our new short and some of the best stocks that we're looking at. Video 3 will be over more of the longs that we are looking at that are setting up a nice chart patterns because despite Friday's sell-off, we still have many stocks that are basing that if they could just break out seriously, would definitely be longs in my book. It might not be perfect, folks, but at least there's some green charts out there, and that always makes me happy. Now let's look at the NASDAQ so you can see what the NASDAQ did. NASDAQ was a lot worse off than the other indexes, what it looks like day to day. That's because it had a very big 3.80% gain, and in 2 days it was up 4.65%, and in 4 days it was up 8.9%, one of the best of the indexes. However, yesterday it was only down 2.63%, and I know it looks bad here because it broke through the open of yesterday. Look at the volume. Volume wasn't even just lower from Thursday's level, it was also lower from Wednesday's level. And besides that, when we look at all the up days, the 3.8% day, the 6.7% day, the 1.99, the 4% day, the 3.9% day, and the 7% day, is a down 2.6 day really that bad, especially when the 50-day moving average is that far away? And look at the relative strength line of the NASDAQ since December. Exactly. You see what I'm doing with the arrow? Very bullish. Big uptrend compared to the NASDAQ. Kind of just actually going a little bit down, it looks like, overall. Since the start of the year, let's see where the NASDAQ's at. Down 2%. Not bad. Still, on a weekly, you see the NASDAQ was up 6% for the week. And like I said, before that, it was up 8.9%. But 6% for the week, third week in a row. As you can see here, looking at the volume on the downtrend, the big red bars, they were much bigger than the green bars on the initial attempt of the rally. And then we got more distribution on big bars. But now we're getting follow-up with bars that are just as heavy. So I wouldn't call it a bottom, but you know what? If we're going to have a bear market rally, this one is setting up to be one of the potential better ones out there. Along that, I'm already up 40% in, so don't feel like I'm showing anything by showing it. As you can see what its charts look like, let's tighten it back up so you can see what it looks like to me on my laptop. And as you can see from the breakout that we should have had if Don Warden and Telecharts would have had over-the-counter bulletin board stock, since it is a United States Stock Exchange, heck, if your charts work, might as well get them, because had we been allowed to use something like that, the over-the-counter bulletin board stocks, with this wonderful, wonderful program that he has with Balance of Power, we would have a 231% gain from 618. Instead, we only have, and we had to get rid of over half of it from the very next day it being down. We only have a 40% gain. Still, it's a lot better than what a lot of other people are doing. And of course, I'll show you my best one right now since we're here. ANCI. The buy date was way back there. Now it's up 73%. However, just a few days ago it was using the wrong one. Sorry. Just a few days ago it was up 82%. So still could be breaking out and moving higher. However, I'm already long, and all my subscribers had a big chance to get long, especially from its perfect setup here, and then move higher from about 50%. But since then, it's just gone nowhere. However, I'm already long it, so I'm not giving away any secrets. So whatever. If you get long it now, you're a little late, but I guess you're not late because I expected to bounce off the 50-day moving average. So consider it my treat. You're welcome. Anyway, let's look at oil. Oil staying within this range. I thought it would be 35 to 50. Looks like it's going to be 35 to 55. But if it keeps going higher, that's about all I got to say about that. Let's look at platinum. Let's get all the way out so we can see these metals and get up close. You can see it didn't close its low day, 1125. Still well above the 50-day moving average, well above the day that it zoomed up 6%. 6.24%, excuse me. It's holding on to all of those gains. 1125 actually closed that day at 1123, so it's higher since then. So pretty darn good. Silver, another nice intraday tail. Found support around the 5200. The 50 is now golden crossed above the 200-day moving average, as you can see. Did that on Friday. So now, supposedly, if the rules work, whenever the price hits the 5200-day moving average, if it has a positive move off of it, you can look to go long silver, and you'll be in a pretty safe position. And if you got to cut your loss, you're right there. You're not going to lose a whole lot. Looking at gold, gold had a very bullish intraday tail. Once again, another incidence of if you trade intraday and if you've taken a daily buy pattern, like let's say the December move here above the 50-day moving average you bought, and you're still on 14%. Had you been watching your stocks too closely and watching it intraday, you would have been shaken out back on March the 10th because you wouldn't have given it time to hold the 50-day moving average. And then on intraday basis, you would have been shaken out on March 18th. Intraday basis, you would have been shaken out March 25th. And on an intraday basis, you would have been shaken out on the 27th. And, of course, we'll go up close so you can see closely. This is why I do not make my moves intraday. Had I been watching the screens intraday, I would have freaked out not once, not twice, not 3 times, not 4 times, but 5 times on my gold position when it's still moving higher. And if you would have just been checking it after hours, you wouldn't have been thinking anything. So I'm just telling you, if you're going to take my trades daily, stock market shorts or longs, like I have one new short position Monday, but I had 3 new longs on Friday and 3 new longs on Thursday. If you're going to then like sell them intraday, like after they make 2-point up move and 10% move or something like that, please don't take them, please. I don't need anybody to make in random sell and buy orders that could possibly start a chain reaction. Anything's possible in this market. It's extremely volatile. Let's look at the VIX still to show you that it's still pretty darn high at 40, which if we look at history tells us that this is still at the very extremely high end of the VIX range. Duh. So please don't trade my longs and shorts that I decide to make investments in intraday. That is not what they're for. Let's see how much time we have. We still have a little bit of time. So what I want to do here is now show you the Chinese stock market to show you why it's important. China is looking much better than the New York Stock Exchange off the lows in 2008. There's New York Stock Exchange after the 2008 lows. Let's look at the NASDAQ then. You want to look at the NASDAQ? Let's do that. Look at the NASDAQ off the 2008 lows. Now, once again, let's look at China off the 2008 lows. Clearly, something's going on here again, just like the previous move in China from 2005. And if we don't remember, it was a 500% move in 2.5 years. Let's go back to the NASDAQ during the bull market in 1999 that I was a part of. Thank God. Now, I want to show you. Let's use the last 2.5 years of that. Let's use 1997 to the 2000 top of the NASDAQ when stocks were going up 1,500 and 2,000% in months. Only a 200% gain. So it seems to me that if those stocks were going up that much in a 200% gain market, imagine how much you missed on the Chinese stock market by missing out on a 500% move. Just something to think about now as China makes its move off the November lows and is up right around, let me show you because our markets aren't, up 39%. We have a new issue coming public thank God it's a Chinese company. Now, I believe they do online video game subscriptions, but no matter what, the ticker symbol is going to be CYOU. And if we look at DL, which is a Chinese IPO recently, and there's been some other ones, and then there's some that don't do well. Like if you look at CMM didn't do well, but DL did. If it's got China in the name, you've got a chance much higher of making money in this stock market. So CYOU, thank God we're going to have another company public. This was the third one public most recently. This was the second one, and then this was the last one that we had. And now finally we're going to get another one. So hopefully that's a bright spot? I don't know. One company ain't going to turn around things, folk, but we need new stocks to have new leadership. Anyway, I'm going to wrap it up. This is JoshUA'sBigWayTrading.com, part 2, 3, and 4 coming next. Aloha.